All right, greetings everyone. Thanks for tuning in here. So, today end up being a pretty important day in the market. Here's the S&P. I mean, we're going to go through the Magnificent Seven, but yeah, this is so here's the S&P. We looked like we were going to make a little bit of a breakout, but we didn't. We got up to a level that was resistance and we sold off. Now, I will admit, I thought that the market was bullish. I thought it was going higher, but you know what? I was wrong. But the idea is, all right, the market's always right. So if you're trading, it's okay to be wrong. What you have to do is to not accept it and maybe get onto the other side of a trade. Like, for example, you think it's going to break out and go higher, but it doesn't and it starts to fade. Well, then you got to swallow your ego, admit that you were wrong, and just get on the other side and buy money or put money into puts or on the downside. Anyway, pretty significantly weak action today. Now let's go look at our Magnificent Seven here. I think the most important thing to watch going forward in the entire market, once again, is Microsoft, just like it was a couple weeks ago. I mean, look at this, right? So Microsoft is obviously one of the biggest stocks in the market in terms of market capitalization. If we go to the SPY, the S&P 500 holdings, you can see that Microsoft is just call it 6% of the market. There's 500 stocks in the S&P 500, and Microsoft is responsible for 6%. So it's obviously very important, and it's obviously trading at a level that was support before, right around 407.50 here. I mean, it's you can't be perfect. It's like within a couple dollars of that. But look at here, October. It's like looky here, late October, right within dollars, and now we're testing that again. So I think going forward next week, we got to watch Microsoft. If this starts to break down, that's going to obviously be bearish for the entire market. All right, let's take a look at NVIDIA. And there's some negative action here too. There's kind of some weak action here. We're not at a critical level yet, so it's probably not as important as Microsoft. In terms of the broad market, you can see NVIDIA is about 6.6%. But what this chart shows is that where there was support at one price, it can become resistance at another price. I mean, sorry, at the same price, but at a different time. There are people who bought NVIDIA here and here that thought they made a great decision when it went higher. And, eventually it went below their buy price. And they're like, man, if it ever gets back to my buy price, I'm going to sell so I can get out of this dog at break even. So when it gets up to resistance, or when it gets up to a level that was support, it can become resistance. The same thing happened here. So if you were trading the breakout, and I know we talked about this over the last couple of weeks because that's what we do, we got some confirmation of the breakout here because what was resistance turned into support. We got to resistance after a couple days, right? Resistance at a level that was support. It couldn't get through. Then what happens? Sellers start to get anxious. They're like, why doesn't this keep going higher? I don't want to miss this. And they start to undercut each other. So a lot of times when you get to resistance, you sell off just like here, right? Here. All right, let's take a look at Apple. Yeah, I mean, there are a couple more really good lessons here. Support can become support, right? People sell and the price goes higher. They're like, oh, if I can buy back at the price I sold it at, I will. So when it finally gets back to their level, that's what happens. So levels that were support can become support again because of seller's remorse, right? Here we have the opposite. Levels that were support can become resistance because of buyer's remorse. All these price levels on this chart of Apple, right? This is a company that's worth how many trillions of dollars, how many millions of shares get traded every day, and it's very clear to anyone, even someone who's never traded stocks before, that some price levels are just more important than others. And if you know where those levels are, obviously it's going to make your life easier as a trader. So support can stay intact. Support can become resistance. So this is going to be kind of interesting to watch. So if Microsoft starts to take out that support and Apple starts to roll over at the same time, that could be the get ready, the get set for a pretty meaningful downside move. All right, let's continue on here. The Magnificent Seven, or the the not so magnificent seven. Here's Facebook, and this is a pretty this is pretty weak here, right? I mean, this is a serious reversion. So the stock was in a nice uptrend, going nice and slow, broke its uptrend, and now there's been some powerful selling. This is what we call a gap. When something closes at one price and opens the next day at a different price, if there's no trading in between, nothing gets recorded on the tape. So it ends up looking like a gap on the chart. Now, as we talked about, one of the reasons why you get support is seller's remorse, people trying to buy their shares back. So if we gap down through these price levels, well, no one's trading. So if there's no one who's trading, there's no one who is selling, who wants to buy their shares back. Now, the same principle holds here. It's not exactly a gap, technically, but we rip through those levels really quickly. But this could end up being what we call a breakaway gap. Stocks tend to gap at two times, at the beginning of a trend, at the end of a trend. The beginning of a trend is when the smart money is like, I'm a huge buyer. I don't care, be aggressive. I'm going to buy my shares. The end of a trend is when people are like, I've been watching this thing go up for 2 months. I'm sick of waiting. I'm finally going to go in. Those are the people that are at the that are late to the party, so to speak. All right, let's see. Google is next. And notice I will say Google. Yeah, now this is important. So we can see here, once again, we see seller's remorse, right? People sold here, and then the price finally went higher. And a lot of them that sold are like, I'm going to buy my shares back if I get them at the same price. So Google found support at that level. I guess we'll call it 182 for, pretty much 2 weeks. And now it looks like it finally could be breaking. And importantly, it's falling into or potentially falling into price levels that the last time the stock was here just gapped right through them. So if there's no trading, if the stock closed here and opened there the next day, well, no one sold. And if no one sold, you're not going to have this big group of remorseful sellers trying to buy shares back. So the sellers may need to get really aggressive and really push this price lower if they want to draw buyers in off the sideline. And that could lead to a pretty, rapid downfall. And it might have started already. And then, of course, we would look for support here, right? Resistance became support. Maybe resistance here becomes support here. So if I was trading this, that would be my short-term target on the downside, right around 175. All right, Tesla. I don't know if it's coincidence, but I've noticed a lot of Teslas around here recently. This is a lesson in what we call the old descending triangle pattern. A lot of patterns are kind of dumb, especially if you get into like GAN theory and GAN analysis and Elliott wave. That stuff is science fiction. But the descending triangle is not, right? The support shows that the buyers are willing to be patient. They're like, yeah, whatever, man. If the seller comes to me, I buy. If not, whatever. The sellers, though, as time is getting by, get more aggressive. They come into the market at lower peaks or lower prices. So you get this succession of what we call lower highs. At a peak there, this one is lower, this one is lower. And a lot of times when you get to support, and you're wondering if the support going to break or if it's going to be a rebound, well, if you get this succession, well, you know what I'm trying to say, of lower highs, that's a good sign that the support is going to break. And that's what happened here. I mean, it broke and it went down, pretty much like $50. All right, last up but not least, we're going to look at Amazon. Ooh, look at that. Some negative action there. And this is going to be important to watch as well. So, will there be support at the former support level? Or will the support break and the stock make a quick move lower? So, all right, everybody, that's cool. We got some things to watch in the Magnificent Seven. They were kind of off my radar screen for a while. I mean, they're never off my radar screen, obviously, but the fact that they're getting to important price levels here, and some are overbought, some are oversold, that's going to make them important over the next week or two to determine which way the market's going to move in the short term. All right, thanks so much, and I will see you soon.